Welcome back. Let's talk about the base metal space now, which did see a sell-off for most of this week. There has been weaker data coming in from China, and there's a possibility of a recession in Eurozone as well, and that really has been putting pressure onto the prices. On your screens, of course, we've seen 0.5% of a decline coming in for copper MCX today, but this week really has been much on the weaker side. Vijay, how would you look at the base metal sector? Because I know you've been saying that the prices do not encourage buying even at these current levels, but do you see them oversold? Do you see them some stability?
Manisha, oversold can be a very misleading term in a pro-cyclical market, because in a deleveraging market which is hemorrhaging, the oscillators or conventional studies on technical parameters might show the prices to be in the oversold zone. Unfortunately, for a trader, these oversold readings can be for an extended period of time. So the prices might continue to decline with conventional oscillators remaining ensconced in the oversold zone. The kind of mark-to-market pressure that an average bull would have faced in a buy and hold kind of a situation will ensure that any kind of a price upthrust or a spike will see people who are trapped on the long side heading for the exit door, as and when the pain of the loss is either reduced substantially or break-even prices are achieved. So my guess is this kind of volatility cluster that you saw in the last couple of trading sessions might just pan out over the next 1 or 2 trading sessions more. I would wait for signs on my screen to see that the weaker hands are now completely taken out, or at least significantly taken out, where overhead supply is not likely to come in. Only then I would buy. And at this point in time, I see no such price volume and open interest correlation pointing towards that. There is still a lot of weakness in the system. On very small price rallies, I think the weaker bulls are likely to head for the exit door and therefore restrict the scope for the upthrust. I would still not write out a check on the long side.
All right, not buying the base metal space. And nickel on your screens, of course, had declined 5% this week and has been falling in the previous weeks as well. Let's talk about some other metals also. And for that, let's get on board. We are joined by Nicholas Sowar, who's Regional Managing Partner, Strategic Client Services at Deloitte Touche, and he joins us on the show. Nicholas, hi. We have seen a poor demand in the global steel industry. The prices are in the negative in this year. What's your sense now going on for this sector?
I believe the demand is going to be suppressed in the global steel industry. I think there's several factors. I think things are absolutely slowing down. Brazil clearly has issues. The United States, I guess I'll say, is kind of limping along, and China certainly has slowed down. EU going to be challenges there. Demand's going to be down for steel.
Nicholas, in specific, how would you look at the Indian steel industry? Do you see demand perking up here?
I believe it would grow. It could grow by 3%, but I think it could grow even more than that. I think it might take a year or two, but I'm very confident that the Indian market is going to pay great dividends in the steel industry. I'm very bullish on India.
Nicholas, some more ferrous metals than an iron ore prices have been in the bearish territory in this year. What's your view going forward in prices? Do you see a pickup in global demand?
I believe the iron ore prices are going to be probably fluctuating between a range of, let me call it $80 on the bottom end to maybe $135 on the top end. I think iron ore prices will stay within that range for the foreseeable future. From a steel perspective, there's about 1.6 billion tons of steel made in the world, but yet there's about 500 million of excess capacity. And I believe that the excess capacity, which primarily comes from China, I believe that excess capacity is going to continue to push prices down, and it's going to affect the profitability of the steel producers around the world.
With excess producing capacity, as you said, the iron ore prices would continue to decline. Then what's your outlook, Nicholas, on the global steel industry in the long term? Do you see prices continue to weaken, and do you see that in some sense supporting demand?
I believe the global steel industry is going to what I'll call move sideways. I think there's going to be pockets of growth. I believe India is one of them. I believe there's going to be, India may have, it might be deemed modest growth, but I think it's going to be effective growth. The rest of the world, I see limping along to some degree. And I think it's going to be potential shakeout time for some steel companies. Those on the edge might not make it within a year. But I do not see boom times going on in the global steel industry. The demand's not there. And certainly the supply's there, but the demand is not there, and I don't see it coming through in the next year.
All right, so that's not a very bright picture coming in for iron ore or steel industry too. Nicholas, thank you so much for joining us with that perspective. And let's talk about the Indian rupee as well, Vijay, before we end the show. And today's been a better day.
Manisha, it's because the 62.30 on the prompt month futures on the currency derivative segment on the NSE has not been overcome by the dollar. That's a fairly stiff resistance for the dollar bulls to overcome. Now, if the rupee was to appreciate from here, I would still maintain my view that 60.40 to 60.60 in the futures, again not spot, would be the limit where the rupee will appreciate and then see a technical reversal.
All right, so watch out for those levels, and thank you so much, Vijay, for joining us and giving us those whole host of ideas in commodities and currencies. With that, completely out of time on Hot Commodities. Thank you for watching.